Today I'm going to be going over CAC. So what is CAC? It stands for Customer Acquisition Cost, and it is the average cost to drive new customers over a given time period. So it's going to take into account the total expenditure on all marketing, advertising, and sales for the period, including wages, including any expenses, and then you're going to divide that number by the number of new customers you drove during the same time period. So if we're looking at some different costs associated with customer acquisition, employee salaries and expenses, specifically your marketing and sales team, all sales related expenses. So if we look down here, there may be travel expenses involved, there may be specific software you need, there may be certain products and services that you need to use to create sales. So all of those expenses that go into sales, that's going to be calculated as well within your customer acquisition costs. Paid advertising expenses. So when you're looking at marketing and paid advertising, what you spent on actual paid advertising campaigns. And then for marketing, you're going to be looking at any design costs, any content costs, any types of costs associated with anything you outsourced outside of your employee salaries. Now, last but not least, any consulting expenses. So if you hire a consultant, that would also be included in your customer acquisition costs. So if we're looking at a formula, CAC equals your marketing plus your sales plus your advertising costs divided by new customers. So when we're looking at an example, let's say I spend $150,000 on employee salaries. So I have employees working on my marketing and advertising team. I'm spending $150,000 a year for those employees. Now, all marketing and sales expenses, let's just say we are creating a marketing campaign, we need some different creative design, we need all sorts of different marketing related expenses, whether it's some type of banner you need created, whether it's a video you need created, whether any type of marketing and sales expense that goes into creating a marketing campaign, which a lot of times would go along with your paid advertising. But paid advertising, let's just say we're running Facebook ads, we're running Google ads. So for paid advertising, let's say we spend $25,000 over the course of a year. And then for marketing and sales on some of the tools that we're using, let's say we spend $20,000 per year. Let's say our travel costs for the year are $10,000. So travel costs associated with sales, maybe you're meeting clients, maybe just travel costs associated with meeting other companies that you're working with on partnerships. So there could be a lot of different expenses associated with all of these different activities. And then let's say you hire a consultant for $5,000. So your total cost for the year would be $210,000. So then what we want to do is incorporate how many new customers did we drive this year? So our total cost, let's say, is $210,000. We drove 1,500 new customers. That means our customer acquisition cost is $140. So it's going to cost us $140 when we take into account all of our marketing and sales and all of those different expenses. That's what it's going to cost us to acquire a new customer. So obviously, if you have a customer acquisition cost of $140, then what you want is a customer lifetime value of a number much higher than this. So you want a high customer lifetime value, you want a low customer acquisition cost, because that means your business is driving revenue and hopefully driving profit. So if you have any questions about CAC, aka customer acquisition costs, it is the average cost for your company to drive new customers when you're looking at your marketing, advertising, and sales activities. So if you have any questions about CAC, please leave them in the comment section. Thanks for watching my video today, and make sure you subscribe to the Surfside PPC YouTube channel.